Whether you're looking to buy a car, decrease your credit card costs, or even qualify for a mortgage, your credit score is the biggest factor in your cost of borrowing money. So today we're going to unlock the secrets to boosting your credit score with these 5 powerful strategies. Hey, this is Joe Harris with Morgan Financial. I'm here with Nick Morgan. How you doing, Nick?
I'm doing great, Joe. How are you?
I'm awesome. So we're talking about credit today.
Yes, we are.
Awesome. You know, credit, like we said, is just so important, and it's one of the biggest ways to help people get their cost of money down and even qualify for products that might not have otherwise qualified for, or even qualify in general for a mortgage. It's just really important.
Yeah, absolutely. All around the board. I think everybody could benefit from a conversation about improving their credit because it's part of everybody's everyday life.
It is. And even the thresholds for credit, at one point for a mortgage, let's say, anything above 740 was overkill.
Right.
You didn't need anything over. There's no added benefit. Now that's been pushed up to 780. So even if you have outstanding credit at 740, you know, there still might be a penalty in the form of a little bit of a pricing hit versus a 780 credit score. And, you know, this video might also help people that maybe have in the low 6s or even high 5s help improve their credit score enough to get into a qualifying range.
Yeah, for sure. Just like you said, it's all the way up to like 700, 800. Like there's always incremental improvements that you can make and benefits for improving your credit.
Yeah.
Even if you have great credit.
Even if you have great credit. But even if you're on the lower end of the spectrum, I know a lot of people are saying, well, I know some places you can get approved, whether it's buying a car or a credit card. There's like, you know, you can go get these, but you're going to pay a lot more.
Yeah.
And every 10 or 20 points is going to put you in a better position as far as costs go.
Absolutely. So yeah, this week, in our experience, we have 5 of the best, maybe simplest ways to improve your credit. And I wanted to go over each of those 5 with you and get into details on all of those.
Sounds good.
Sweet. So the number one way that we have is make all your payments on time.
Yeah.
And now this might sound like a no-brainer,
right?
But I know you have a lot of, you know, you can go into detail on on why it might not be.
Yeah, like you said, to some that sounds like a no-brainer. If you don't make your payments on time, it's going to hurt your credit score.
Right.
So credit's going to look at a bunch of different things. And I don't want to get real technical in this conversation. The credit's going to look at the timeliness of your payments, right? Think about from this perspective. If a creditor wants to look to see, you know, your ability to make a payment, the credit score should show that, right? And if you're not making your payments on time, that's not a good credit risk. So it's going to lower your payments. The future creditor wants to know that you're good at making your payments on time. So by not making your payments on time, that's one of the biggest factors in your credit score that's going to hurt your credit score. So and some people say, well, only focus on paying off one bill at a time. I understand that, but don't let your other bills lapse. If you can pay minimum on those, then pay minimum. But I'm not going to get into that type of strategy, but make your payments on time. It should go without saying, but it's the first thing I got to say because it's one of the most important factors in your credit score.
Absolutely.
Is timeliness of payment.
Yeah. I mean, you could do everything else on the list, but if you don't do this,
it's going to hurt your.
Exactly.
Yeah.
Yep. Absolutely. So number 2 is then review your credit report. Now, if you do review your credit report, what would you hope to find that might help you improve it?
Well, you want to look over that credit report and first thing you want to look for is mistakes. Any mistake on there. If there was something that was reported in error, you know, you should reach out to your creditor and say, hey, I believe this was reported in error. Now, there's a dispute process you can do. The problem with the dispute process, it might give you a false good score. And you're like, well, that's fine as long as I get the score. But for like a mortgage, if there's something that's in dispute on a credit report, we know that's just not being calculated into the credit score. So some lenders will make you take that account out of dispute so we can run it properly without that not having been in there. Okay. Now, when I say make you take it out, you don't have to do it. We can't make you do anything like that. But then it gets us a true score because sometimes things are in dispute and they're not actually being disputed. Right. But if there's an actual issue, you should take it up with the creditor, have them, you know, if it is reported an error, have them fix it. And if you need a quick credit fix, you can typically get them to write you a letter that says, hey, this issue was, dispute or was reported in error, and they can take that letter and get their credit updated faster with the creditors, with the credit reporting bureaus like Experian, Equifax, or TransUnion.
Yeah. So they do make mistakes.
There are mistakes out there.
Yeah. And I think that might be one myth is like everything's on there perfect. It's like, no, they're human too. They do make mistakes.
There
so
are,
reviewing that is definitely
you want to review
good use
that
of-
without
good
a
use of
doubt
time.
and make sure it's any errors you find, you want to dispute them, a formal dispute process, or you reach out to your creditors and try to get them fixed.
Yeah. Yeah. Awesome. So number 3 I have is reduce your credit utilization ratio. Now, what does that mean? What is the utilization ratio? How can you improve it?
Okay, your credit utilization ratio is basically the amount of total credit you have, right? And the amount of debt outstanding. So let's say you had a limit of $10,000 on a credit card and you owe you have a balance of $3,000. Well, you're at a 30% utilization on that credit card, right? It's the outstanding possible debt you can have and what you actually have in outstanding debt, right? And so obviously, the higher those are, the more desperate you're going to look for credit. And creditors don't like to give credit to those who are desperate, right?
Yeah.
Those who really need it.
Yeah.
But the problem is that, if you owe too much money on all of your cards, they're all maxed out, the likelihood of you defaulting goes up.
Right. Yeah.
So, one thing there's a lot of little tricks in this region. Some people open up new credit cards and spread it around, but then it's the total outstanding debt as well, because the credit reporting bureaus, you have Equifax, TransUnion, and Experian are 3 of the reporting bureaus, right? And then you have repositories that suck all those in and give you a credit score.
Yep.
And so these credit scoring models, they're not dumb. They know that they kind of have an idea of your income. They kind of have a financial profile built for you within their algorithm. So if you just spread out that debt a little bit, it might help you a little bit, but it's better to get those debts down. So pay down your debts. Well, and if you only have so much to spend, you want to spend it to pay down the debt that's going to have the highest impact, right? This isn't about debt consolidation.
Yeah.
This is about spending. Like if you have a 90% utilization ratio on one card and only a 30% on one, well, if that 90% is your highest interest rate also, you want to get that down as fast as possible.
Right.
Whereas on the 30%, you might want to make your minimum payment and put all the applicable ones towards your higher interest rates or your higher credit utilization rates. Does that make sense?
Yeah, it totally does. And in terms of your total utilization percentage, what would be a number to shoot for?
0.
0. Okay.
People, I've heard out there a lot of times where people are like, oh, you want to be between 20 and 40%. Look, that might be true for the algorithm, but at the end of the day, being debt free, even though we sell money and debt for a living, being debt free is obviously the goal or as close to that goal as you can. So, obviously 0 is the goal, but 20 to 30% is still acceptable, up to 40%. Once you go much past 40%, it starts to really impact your credit score.
Gotcha. Awesome. All right. So number 4 is get a new trade line. Now, what does that mean? What is a trade line to someone that might be unfamiliar, and then why would it help?
Okay, so this really applies to people that have what we call thin credit. So if you have a credit score, and it's not bad, but you might not have a lot of credit out there, your credit score can be improved. And I'm not telling people to run out and get debt. Please don't run out and get debt. That being said, maybe you have a car loan, but no credit cards. Maybe you have like a very small amount of credit out there. Ideally you'd have 3 trade lines in 3 different ways. A credit card, maybe a mortgage, and a car loan. That would be ideal because you have 3 different utilizations of credit. And the credit card, obviously you want to keep that the actual outstanding debt on that low. But if you don't have a credit card, you don't really have credit. A lot of people might be watching this that have very thin or no credit.
Yeah.
And one of the best ways to build credit is through a secured credit card. Because if you go to the credit card companies and say, give me a credit card, and you have no credit score and no history, they're going to be like, I don't know, But the secured credit card, really all that is you give the bank, whether it be, I'm not going to start naming bank names, but a big bank, you give them $300, they'll give you a credit card with a limit of $300. And once you prove you can make your payments on time, it's going to go from a secured line, that's what the $300 up front was, to secure that line. And it's not a fee, that's just as basically collateral for what you're borrowing. And over time, they'll unsecure that line. And the credit will go up. By having that secured line, it will go up even further once it becomes unsecured. Just remember to make your payments on time. If you love paying cash for everything, we've had those customers that they have a ton of money in the bank, they don't use credit, they don't have a lot of debt, they don't want debt. This is something you get this secured line. You go out, you buy a cheeseburger on it or whatever you eat and pay that off every month. It will only help you improve your credit.
Yeah. Awesome. All right. Sweet. And now the last, fifth and final one is deal with your past due accounts. How would you go about doing that?
Well, there's a lot of different types of past due accounts, but if you have collections outstanding, some people will say don't pay those off. Long term, short term, that's the right thing to do. If you pay off, let's say you had a collection from 5 years ago and you go pay that off today, your score is actually most likely going to go down in the short term. Right? Because you're taking something that your credit bureaus almost forgot about. They're like, that's so old. He's got all this good credit since then. You're taking something that they almost forgot about. You're bringing it current, right? And saying, hey, look at me. And now it's going to drop that score in the short term. Now, you might have to pay it off to qualify for a mortgage or I don't know what else. But if you do pay it off in the long term, it should improve your score because you're showing the creditors, look, I know I didn't pay this, but I may write on my debt.
Yeah.
Okay. Now, there's some things like a tax lien. It's going to be hard to get. If you owe money on your taxes and then you got a lien put against you, it's going to be pretty hard to get a mortgage without paying that off, right? But if it's a collection, maybe make sure you speak with your loan officer to say, look, do I need to pay this off or not? Because if you pay it off, it's only going to hurt you in the short term. But if there's other things on there, let's say that you can negotiate a deal with the creditor. Maybe that collection was an error, but you say, look, I know it's an error. If I pay this, will you have it removed from my credit report? I don't know if that's legal or not, so I don't want to give you bad advice, but it never hurts to negotiate if you're going to pay a debt off. If it's reported an error, that they take it off, see if they'll take it off or give you a letter to say it was dealt with or paid off or removed or whatever the language would be to update the creditors to see if you might be able to give a little bit of a bump to your credit report.
Yeah. Cool. Sweet. So that was 1 through 5. And then a little bit of an extra. I had an idea here. Maybe you could give a real life example without giving names or too many details of someone who came in and didn't have the best credit or could improve their credit and increase or decrease that cost of borrowing money. And then maybe you could go into detail on a real example.
Yeah, absolutely. So this happens quite frequently with us. I mean, back when I was a loan officer many moons ago, people would come in and, they had, because there's income, there's assets, and there's credit, right? And typically, if you have good income and good credit, we could figure something out. If you have good credit and good income, we could figure out the lower down payment. But if you're missing 2 or 3 of those, it's going to be tough. But I remember one in particular, gentleman had been through a divorce and there was debts that weren't paid and all these things in order to figure things out, and his credit was damaged. And so we worked with him and helped him improve his credit score. And I remember this number. It was a 594. And we worked with them for 6. We don't do credit counseling. We don't take money and tell you we're going to fix your credit, but we'll give you some advice, right? Our loan officers are trained to give advice, recommendations, just advice on credit to say, look, if you did these things, it's going to improve your credit. Well, this individual, because the way his divorce decree was written, we took that and he took it back to the credit reporting bureaus to show that he wasn't responsible for some of the debt that was reporting an error on his credit. He got those removed. All the new other credit cards were paid on time. He reduced his debt or credit utilization rate down, and he went from like a 594 to like a 708 in a matter of like six or 7 months.
Yeah.
And 6 or 7 months sounds like a lot of time, but the older you get, the less time that really feels like, and we were able to help him buy the house that he wanted because he had a good job. He had money in the bank. He had a good income. He was just faltering on that credit piece. And so had he not called us and waited 6 months to call us, he would have been in the same position. So even if you think your credit's damaged and you can't get a mortgage, well, maybe you can. It's worth the shot to talk to an expert. We'd be happy to help you if you're in the state of Florida. But if not, just talk to your local mortgage expert. You can call those 1-800 numbers, but are they really going to help you or if you're not ready, are they just going to move on to the next one?
Yeah.
So there's a lot of people out there that can help with your credit. Now, if you're not looking for a mortgage, there's lots of other tools online to help you with your credit. But if you just start with these 5 things, I think there'll be a decent impact on your score. And so let us know down below, what did you think of this information? Do you know of anyone who might benefit from this, whether you're a real estate agent or talking to a potential buyer that just thinks their credit isn't up to snuff, or you yourself are, or if you know someone who's looking to improve their credit, just send them this video, see what they think, And do you have anything else?
No, I think that's it.
Cool. Well, that's all we got today. These 5 things, if you work on these, if your credit's faltering, it could certainly help you out. If you have any questions, comments, concerns, please reach out to us anytime. We'd love to help you. And put your comments down below what you thought of this video. Like and share, and we'll see you next time.